Let's talk about numbers that most crypto analysts are completely ignoring. KASPA's hash rate has reached 691.8711 petahash per second, a figure that represents massive computational power securing the network. This isn't just mining activity. This is institutional-grade infrastructure commitment that signals serious long-term positioning. With 92% of total supply already mined and current block rewards at 4.37 KS dropping to 4.12 KS in just 21 days, we're witnessing supply dynamics that create natural scarcity pressure. But here's what most people don't understand about KASPA's approach. They've been building infrastructure first, price discovery second. This isn't retail FOMO buying during pumps. It's, methodical accumulation by investors who really understand infrastructure development timelines. They're building positions while others get bored and move to more volatile opportunities. The psychology here is just brilliant. Impatient traders see flat charts and, well, they conclude nothing is happening. Meanwhile, serious investors recognize that blockchain infrastructure development takes years, not months. They understand that boring price action often comes right before those explosive discovery phases, when technical capabilities finally match market recognition. Smart contract functionality honestly changes everything for KASPA. Right now, they're mostly known for fast payment processing, but smart contracts open the door to DeFi applications, NFT platforms, and complex financial instruments. This expansion from payments to programmable finance dramatically increases the total addressable market and use case diversity. The timing alignment is, honestly, pretty remarkable. The Layer 2 launch in September 2025 actually coincides with broader crypto market maturation and, the acceleration of institutional adoption. Projects with proven infrastructure and expanding capabilities are positioned to capture disproportionate value during the next growth phase. The very soon smart contract announcement represents more than just a feature addition. It's really a validation that KASPA's technical roadmap is progressing ahead of schedule. Most blockchain projects, they announce capabilities years before delivery. KASPA has built infrastructure first and only announces capabilities when implementation is actually imminent. This approach creates a compressed timeline between announcement and activation, which reduces the speculation period while increasing execution credibility. When smart contracts go live, developers can immediately begin building applications rather than waiting through those extended development phases that, usually characterize other platforms. The BlockDAG architecture gives KASPA some pretty unique advantages for smart contract execution. Traditional blockchain sequential processing creates bottlenecks as network activity increases. KASPA's parallel processing maintains speed regardless of transaction volume, making it ideal for high-frequency DeFi applications that honestly struggle on congested network. Layer 2 functionality adds programmability without compromising the speed and security that make KASPA's base layer so valuable. This creates a best-of-both-worlds scenario: lightning-fast payments on Layer 1, with complex smart contract capabilities on Layer 2. Market positioning becomes critical as smart contracts launch. Early applications and developer adoption really determine long-term ecosystem success. KASPA's proven infrastructure and speed advantages position them to attract developers frustrated with slower, more expensive alternatives. Listen, if this analysis of infrastructure-first development strategy is giving you a new perspective on how to evaluate blockchain projects beyond price charts, then I need your help amplifying this intelligence. Hit that like button again if you haven't already. Share this video with 3 people in your network who need to understand the difference between hype-driven and fundamentals-driven crypto projects. And drop a comment below, telling me, do you think patience-based accumulation beats speculation-based trading? I read every single comment and often feature the most thoughtful responses in my follow-up analysis. Here's what the wallet accumulation data reveals about conviction-based investing versus speculation-based trading. Long-term holders reaching all-time highs during sideways price action really demonstrates a sophisticated understanding of infrastructure development cycles. These aren't random retail investors hoping for quick pumps. These are informed participants who recognize that blockchain projects require years to build sustainable value. They accumulate during boring phases because they understand that, exciting price discovery typically happens after infrastructure completion, not during development. The patience trap concept applies beyond KASPA to entire cryptocurrency evaluation methodology. Projects with strong fundamentals often trade sideways while developers build and test systems. Impatient capital flows to more volatile opportunities, creating accumulation opportunities for patient investors. When all-time highs eventually break and, infrastructure completion suggests this becomes probable, years of sideways consolidation often compress into weeks of rapid price discovery. Patient holders benefit from both accumulated position size and explosive recognition phases. So this creates, a kind of natural selection in crypto markets. Speculation-driven participants cycle through these volatile opportunities, always on the lookout for quick gains. Meanwhile, infrastructure-focused investors are more methodical, steadily accumulating proven projects during their development phases. It's really interesting. Different strategies, different risk profiles, and of course, different outcome probabilities. I just want to thank every member of the TJ Crypto World community for being part of this journey into blockchain projects that actually prioritize infrastructure development over, marketing hype. Your engagement, your intelligent questions, and your patience with deep technical analysis, it honestly motivates me to keep uncovering these methodical development stories that could, reshape digital finance. So, KASPA's Layer 2 Mainnet launch, it really represents something valuable in the crypto space. A project that's actually built infrastructure systematically, kept up technical progress even during times of market volatility, and, prepared for future capabilities expansion through a proven foundation, not just based on speculative promises. Whether they succeed in capturing smart contract market share or face unexpected competition, we're equipped with frameworks to evaluate their progress intelligently. If you want to continue exploring infrastructure-focused blockchain projects, check out my comprehensive analysis of Ethereum Layer 2 scaling wars, which solutions are actually delivering. I'll link it right here. It's a deep dive into how different scaling approaches solve blockchain limitations, and it perfectly complements today's KASPA infrastructure analysis. Remember, the most sustainable crypto investments often come from projects that build during boring markets, accumulate conviction-based holders, and deliver capabilities when technical development aligns with market readiness. KASPA is demonstrating what patient infrastructure development looks like. Stay analytical, stay patient, and I'll see you in the next video, where we'll be examining another project that chooses fundamentals over speculation. Until then, this is TJ from TJ Crypto World, reminding you to research thoroughly, invest based on conviction rather than impulse, and remember that infrastructure builds slowly but rewards patience. The next breakthrough is always one methodical analysis away.